Hi, and welcome back to our YouTube series, 60-second highlights on risk. This summer we're focusing on protecting directors and officers against their personal liability. And in the last 3 episodes, we've talked about lawsuits. We've talked about where the lawsuits are coming from. We've talked about who's claiming in these lawsuits. And we gave 3 examples. Today, we're going to start focusing on directors and officers insurance. And it's a broad subject. There are many different coverages in a D&O policy. I'm going to focus on 5 and describe them briefly and leave you with some further reading. First coverage is referred to as Side A coverage, and it's for payment on behalf of each of the insured persons being directors or officers, for all loss for which they are not indemnified by the insured organization, where the insured organization cannot or will not indemnify them. That's where Side A coverage comes in. And it applies for when the insured persons become legally obligated to pay as a result of any claim against them during the policy period for a wrongful act committed. Now, Side A coverage is typically expressed by the insurer as being non-rescindable unless there's non-payment. And of course, this coverage and other coverages that I'll mention today and others I won't mention are all subject to exclusionary language. Now, Side B coverage is different. Side B coverage applies for payment on behalf of the insured organization, not the insured persons, for all loss which the insured organization grants indemnification to each insured person, as permitted or required by law, which the insured person has become legally obligated to pay for a wrongful act committed, allegedly committed, or attempted by such persons before or during the policy period. Side C coverage is referred to as entity coverage, and it applies for loss incurred by an insured organization as a result of any securities claim and often other claims made against the organization during the policy period. The next coverage I'll talk about is employment practices liability. And this extension of coverage, part of a D&O policy, is for suits brought by employees. And as mentioned in an earlier episode, suits brought by employees are the #1 source of claims against directors and officers of public, private, and non-profit organizations. Claims can include for wrongful dismissal, discrimination, humiliation, sexual harassment, oppression, and many other allegations. The 5th coverage I'll touch on is fiduciary liability. And this coverage is for claims against directors and officers or the organization alleging negligence in the administration and maintenance of employee benefits plans. A lot to throw at you, very complicated subject, and we've only touched on it briefly. So let me leave you with several important lessons. First of all, have a specialist review your organization, what your organization requires, what your risks are, and the relevant extensions of coverage that your organization requires. Focus on quality, not price. D&O coverage is already very competitively priced due to the number of insurers offering the coverage. So ensure that you get the top quality of coverage and ensure that you have a good competitive price as well. As far as brokers are concerned, use a specialist broker with much experience in directors and officers insurance and D&O claims, not a generalist. And lastly, as far as insurers are concerned, as mentioned, there are many insurers in Canada offering D&O coverage. All policies are different. Some are broad, some are very restrictive. Few offer all the extensions you could get. For further reading, I suggest you go to an excellent publication by CPA Canada entitled Directors and Officers Indemnification and Insurance, 20 Questions for Directors and Officers. And lastly, contact us at Directors Global for an audit of your D&O program and a checklist of coverages. Thank you, and we'll see you next episode.